Okay, let's start off with a brief intro on yourself.
Sure. So my name is Will Peets. I'm the CIO of Passport Digital Holdings. We're an investment firm that invests both in liquid currencies as well as ICOs.
Great. I'm KJ Erickson. I'm the co-founder and CEO of Public Market, which is a commission-free e-commerce protocol that pools inventory data from professional sellers that are selling on Amazon and eBay, and then allows anyone to build easy-to-implement storefronts to sell those products onward.
Brian Kelly, CEO and founder of BKCM. We're a cryptocurrency investment firm.
My name is Shiraishi. I'm a COO of PATRON. We have raised $40 million US dollars in ICO previously in May this year.
Great, thanks. So before we get to the do's and don'ts of investing in ICOs and blockchain, why should people be investing in ICOs and blockchain?
Sure.
I'll take it. Sure. Pretty simply, money's changing, and we talked a little bit about how the way we interact with value and the way we interact with currency and money is changing, and so to take some portion of your portfolio, and you need to remember that this is the riskiest thing that you can do. It is as risky, if not riskier, than some startup venture capital type of investments. But to have some portion of that, let's call it 1 to 5%, in this, I think every investor would want to have a little bit of the risky bucket. And if you do it properly, if it's sized properly, 1 to 5%, if we're all wrong about this and it goes to 0, you lost 1 to 5%. It's not life-changing. But if we're right about it, you're talking about multiples, and that could be life-changing.
I think someone made a comment earlier, I think it was the Stellar chain discussion. People were focused on the cryptocurrency, but that's not really what you should be focusing on. It's what does that enable and the use cases that enables. And so we've talked a lot about remittance or utilizing idle resources, whether that's compute or storage. And when I hear people talk about the benefits of this for their portfolio, they often focus on, oh, had you invested in Bitcoin for the last 5 years, your risk-adjusted returns would have been better. It's negatively correlated, and what you should really be focusing on is these use cases and how they disrupt existing companies in your portfolio, right? So to take an easy example, if remittance solutions on blockchain work, it could disrupt Western Union or other companies in that market, which could be in your portfolio, and on a ex-ante basis, it's going to be negatively correlated with your portfolio. So for me, that's it's those end use cases and the impact that they're going to have on other things you're probably invested in as a core reason to invest.
Okay, so let's start with the do's. You just kind of gave us a do. It has a function. It's doing something. Yeah. What are some other do's to look at when you're looking at blockchain or ICOs?
So I would say do your own research. I think the speed of this market and the allure of big returns gets people very, they want to be haste, they want to make quick decisions. And so a lot of people look at the advisors or other funds that are involved in the deal as kind of a proxy for the research. And I think there's just so much noise out there. There's fund managers that spend more time on Twitter than they do doing their own due diligence. And so it's your own best interest to kind of own that. So I think that's the primary do, is kind of be committed to it if you're going to do it and do your own work. But
how do you do that? Where do you start?
I mean, there's probably some very simple things in terms of just checking the information that's being presented, right? In terms of things like advisors, it's well known how there's been quite a few projects who have posted an advisor without the permission of the person that they're representing. So that's part of it. I think in this space, because there is a lack of good reporting tools, that probably building a network of other groups that you trust to do research is worthwhile. So even at events here, there's a lot of people who spend a lot of time, and so it's probably good to kind of build that network to help you with diligence. I don't want to take the whole...
I mean, I'd say that diligence in the ICO space is not that different than diligence has historically been in the early stage venture capital space. You look a lot at team, you look a lot at background and experience, because you don't necessarily know what that team is going to come up against in the future. So you want to look at the quality of their ability to respond to problems and solutions as they come. I think what's really different in the blockchain space is the ability to do technical due diligence, because they're, especially for the projects that are most likely to succeed on the consensus protocol side of things, there's very few people in the world that are qualified to do that that type of diligence. And so I think that when you're talking about dues for investing in ICOs, we need a lot more dependable resources to do really deep, high-quality technical due diligence.
Yeah, I would echo the due diligence, and it's difficult. I think talking to the team, I don't think there's anything wrong with calling them up or sending them an email and asking what they're doing, but also, very importantly, what their incentive structure is. So what we've seen in ICOs in the past is everybody gets the lump sum right up front. You get $50 million, and then you chill out. You go to the beach. And there's not much of an incentive to execute after that, right? So we've seen projects that take 3 years to complete, and there's not much of an incentive to get it done. I would look for projects that are going to have some sort of timeline and roadmap of when the money gets released. You finish this type of thing, then we give you another 10 million. You finish this, we give you another 10 million. I prefer to look at projects like that the economics incentive for both the investor and the team are the same.
Right. How is that money distributed?
So, yeah, team member is really, really important. You should look into what kind of technical guy they have, and they have if they have a Jed Makarov on the CTO, it'll be really reliable, like David A. Cohen or these guys. You want to know, if they have a good security. I mean, there are so many hackers and scammers, coming into your site, and you have to be. These guys have to be protecting their platform every day, 24/7. It's really important for look into their teams, what they're doing.
What about reading the white paper? I feel like most investors don't even read the white paper anymore.
Yeah, certainly. I mean, there's a long list of kind of bare minimums that you should do. I think that the main point being is doing those yourself, as opposed to, I can kind of taking someone else's word for it, taking things at face value. Even on the technical diligence part, it's very difficult for a lot of people in the space who don't have very specific background in distributed systems or something else in order to do that sort of diligence. So
So are you against ICO rating sites, or do you think those are helpful?
I think they have the potential to be helpful. I think, and again, I've never, I would say, kind of relied on those in any capacity. I think the one concern I would have is, again, kind of alignment of interests, and are these being paid or compensated in some way to promote certain ICOs? So oftentimes, if I go to CoinMarketCap and I see a banner ad for an ICO, it's almost a negative indicator or a contraindicator to me because of that tactic alone. So I can't speak enough to the different ICO rating agencies, whether they're again independent and providing a neutral opinion. But that would be one concern I have, because you see that in the media in the space in particular, and so that's something that I would be at least cautious about.
Yeah, I'd say that the ICO rating agencies are problematic for a couple of reasons. One is incentive alignment. Even the ones that aren't, their business model isn't directly dependent on the ICOs themselves paying, their business model is still dependent on ICOs as a general business or investment structure working out. So there is incentive issues there. But there's more just a massive reductionism, right? They'll often go through and say, do you have at least 5 advisors? And are some of them these ones that are well known enough? And that gets you points, right? That is very poorly correlated to the actual success of a business. This really goes back to do your own research, which in the early days was just a catchphrase and is now becoming something that we've realized is actually critically important to successful investing in the space.
Yeah, just on the white paper, I do think it's important to read it. In reality, nobody does. Nobody reads the prospectus for an IPO. You hear from somebody it's going to be a hot one, and that's the one you want to be in. In this space, though, in particular, because it's early stage investing, because it's a global asset subject to multiple regulations and maybe no regulations, it's more important than ever to read that white paper. You may not understand it all, but it's more important to do that than it is with an IPO through a brokerage firm that has a prospectus. You're probably okay just ignoring that one.
Really important, and the website itself, you want to look into the website and see, their platform is realistic or not, as you said, and it's really important to reverse ICO. What they're reliable or not, their record. You should study their community as well. There are many community good, like communities relying on the product itself or not. There are so many good opinions in community, Telegraph community, and these communities supporting them. And if they have a good point to rely on, if they have the leadership to lead the community, that's when I buy like ICO coins, I'm always looking for looking at the community stuff, maybe more than the website itself sometimes.
I think that's a good point. The community, going on their Telegram channel, reading what people are saying, seeing what questions are being asked, how are they handling that? Do they care? Are people getting the answers that they're looking for, and connecting with them, which is...
Yeah, ultimately, you're really looking for network effect. So that's how these things are valued. The bigger the network, I look at these as currencies, right? And a currency, even a traditional currency, the valuation will grow to the size of the underlying economy, the underlying GDP. So when you're looking at an ICO, you want to evaluate how big is that market, then how big does the currency need to be to support that market, and do they have a network of people that initially are going to bootstrap the network effect? That's incredibly important.
Do you look at where they are in their kind of life cycle? Do they have to have an MVP? Do they have to have something built? Can it just be an idea?
Yeah, I mean, the earlier they are in their life cycle, that should be reflected in their valuation, because the riskier they are, right? Yeah. And the less data points you have to judge the team's execution quality. And so then, of course, the standards for the white paper or any actual materials that you've seen, those become your only clues into the actual executional ability besides the background of the team. So I think that there's been a major disconnect in this field between valuation models and stage of project and basically any indicators of their future success and ability to build network effects. So that's another thing that we don't necessarily touch on as much when we're talking about investing in ICOs, but what is the valuation, and is it reflective of how much risk is in this project?
And that's actually something we've been focusing a lot more in the deals that we've looked at recently, is what's their go-to-market strategy, right? So you've seen a lot of projects, especially on the base protocol layer, that are really just big science projects, and they get a lot of hype because they're going to innovate along, scalability or some other dimension. But then you talk to the team, and it's like, well, why are people going to use this? It's like, oh, well, because we're going to have X transactions per second, and that's just not the reality of how products get adopted. Exactly. And so it's encouraging because you're seeing more entrepreneurs come to the space that have worked at Google and Apple and other places where they have an actual track record of shipping product, developing, and they're coming with a mindset of what's the hook for someone to actually use this. So that's a very easy question to ask, and if the entrepreneur or the team's not ready to articulate that and what problems is solving, then it's an easy way to pass on it.
Yeah, and realistic assumptions as well about what they actually can do. We had somebody come through our office and said, here's the valuation that we're looking for our coin, and I asked them why, and they said, well, we're going to take 70% of Amazon Web Services business. And I went, oh, all right, 70%, that's amazing. So realistic assumptions, if the valuation works at 0.7%, then maybe I'm interested. Yep. But it's important to not, there's a lot of hype, there's a lot of excitement, this is a new technology, it's important to temper those and understand that these are still businesses. They still need to execute. They still need to address a problem. There still needs to be an addressable market. Just because it's crypto, just because it's an ICO, doesn't mean the normal rules of economics and business don't apply.
Exactly, right? I think that 2017 was the year of if we build it, they will come, right? That's like very wishful thinking. And now we're starting to realize that the technology working, that's just a hygiene factor. The real success factors are whether you can get that product to market and get people to adopt it. So looking at what the go-to-market strategy is, how much is that focused on in the materials that the team puts out, right? That'll give you indications into their thinking, let alone speaking to them. How realistic is it? And critically, because this is what is so different about this industry, is how well designed are the incentive mechanisms. If they're using a token, they have access to an entirely different type of incentive mechanism that we've ever seen before. And if you look at the biggest success cases in our industry, whether that's Binance or Fcoin, et cetera, like these are really creatively, intentionally designed token incentivization models. So I think putting a lot of focus there on the go-to-market is really important.
Yeah, we have to probably look for the ICO period and after ICO. At the ICO, if they can sell, if they can't get to the cap, then they can't be listed. So they have to be selling the token really good. So the marketing is really important. You have to look for the website mentioning about the main media like Forbes and Cointelegraph and these TechCrunch. Are they on these media? Are they reaching out to the public really good or not? How is the audit, the points and all the stuff? It has to be like cleared, and as you said, of course. And after the ICO, even they sell really good, they can't be declined. And because of incentives and the airdrop and all the calculation, it has to be done really good. It's really difficult, but you have to think about ICO period and after ICO as well.
What about token structure?
In terms of the token model itself?
Yes.
Yeah, I mean, I think that's something that's evolving. The space is getting, is better understanding. I think there's some token models, whether it's, work tokens or burn and mint models that have a more natural alignment between the valuation of the token and the utilization of that network. I think this concept of a medium of exchange token, I think is pretty well determined that it's not, sustainable, and has really just been used as a funding mechanism. And so I think it's very important. I think it's challenging because it's still an area where there's new models being toyed with, developed, studied, and unfortunately you don't have a lot of these out in the wild yet, so you can't really evaluate how they perform or if the economics on paper match how they actually behave. But I think there's certainly some models that many of us have decided are not good or sustainable. So that's definitely another way to kind of remove or narrow the universe.
Well, the one question that I ask everybody is, okay, you've got a great solution to a problem. If I take away your coin, does it still work? Can I do it with Bitcoin for the medium of exchange? And if the answer is, oh yeah, sure, we can do with anything, then I don't really want to buy that token, right? It's got to have a very unique function that people have to use it that isn't already in the marketplace.
And what about thinking about it getting on an exchange already and liquidity and all that? Is that something that you're thinking about when you're looking at investing?
Yeah, I mean, certainly, I think doing a token sale appropriately is going to allow you to be eligible to be on an exchange, right? So groups like Bittrex or others are going to play by an ever-changing rulebook onto what they allow to eventually be listed. So I think you want to understand that. I mean, there is probably some credence in looking at the cap table or the types of groups that are investing into these tokens, because you do have groups like Binance Labs and Huobi and others that are actually investing directly into the projects. That's a bit of a gray area in this whole space, but it does help you understand their ability to eventually get listed.
Yeah, I mean, I think that for short-term investing, the team's plan to get on an exchange obviously matters. If you're talking about betting on long-term success, if they are long-term successful, plus we have so many years to build out decentralized exchanges, this becomes much less important. I actually think that there's a lot of under-attention to the strategy leading up to getting on an exchange, because what you often see is so much pressure from a team, we need to get listed, and then you've got a whole ton of sell pressure on that token that's built up from people, wanting to flip it, et cetera, and the team hasn't built up the buy pressure. So I think that actually a much more balanced and sophisticated approach to how do we get on an exchange at the right time when we've built up support for the token is a better way to approach that.
Exactly. I think the community, as mentioned earlier, community supporting is really, really important. Like for us, Korean community really serious and supportive for us and for listing on the Korean market, and those informations that we don't know, they just support us with the information. Market making point of view, yes, of course, market making is really important. Binance Coin is going to be really strong, I'm sure. But the marketing itself is really important. How we make our the coin liquidity better way to better stage, and you have to look into how reliable that platform is.
I think liquidity is it's a double-edged sword, right? Because it's an allure for people in this space, because you get this notion of liquid venture, and I can get venture-like returns, but it's something that's tradable. But there's so many different dynamics that are going to impact how it trades. So you see a lot of very promotional, structures, right, in terms of getting investors in. So some sort of bonus or discount. And unless you have transparency into everyone who's invested in that project and what their own price point is, it's really hard to actually then understand how this is going to trade, once listed, right? And that's again kind of the misnomer of following maybe certain funds into an investment or other things, because oftentimes they're going to have different terms, and that's going to impact a lot their willingness to sell at different levels and how it trades afterwards. So it's something we could have a whole panel on to discuss the kind of implications of liquidity in this market.
But that's a great point. I mean, it is critical for these to be listed on exchanges. That is the entire point of having the token, is that you have this liquid venture capital. But it's also critical how they get there. And there isn't a lot of transparency on who's in it. I describe it as like everybody says, oh, follow Warren Buffett. Well, you know what? You're not going to get the deal that Warren Buffett got on Goldman Sachs during the crisis. You're not going to get that same deal. So understand that there are different layers, different levels that people bought in at. Yeah. And as long as you understand that, then you can have a sense for whether or not, once it gets to exchange, whether the price is the correct price or not.
But some of this is a circular discussion, though, right? Like, the token itself is not the end game. The token is an incentive mechanism for this network to work. Mm-hmm. If the network has value, for distributed storage, just as an example, then it's going to have a natural demand. And this discussion kind of shifts a lot, because all of a sudden there's natural participants in the market. So the fungibility or the ability to trade it is a feature, but the token itself is, again, not the end game. It's what's enabling this technology to happen in a distributed fashion.
So what about security tokens? Because those are not listed on exchanges yet. I mean, we're getting there, but is that a good investment, or should people avoid those?
I think, at least from our own investment perspective, we've invested in the infrastructure that's supporting security tokens, but we really haven't invested in any security tokens for that exact reason. You really don't know how this is going to play out. There's also different types of security or different classes, right? Whether it's Reg D versus Reg S, and they have different lock periods. You have Reg CF, which doesn't have any lock at all. So there's a lot of things to think through and consider there. And I think for most people, it's probably premature to invest too heavily into that until you have, I think Mason mentioned Open Finance, you have Templum, T0, Shares Post, a lot of groups that will eventually start providing liquidity for those. But I would say at this stage it might be a bit early, again, unless this is what you're doing as a full-time job. I would agree.
I mean, buying the infrastructure, the exchanges that are going to trade these, but in my view, in the way that we've invested, securities tokens are going to be very big. They're probably 3 or 5 years away. And part of the reason why I say that is, let's just say you have a real estate project that you want to list, and you go to your traditional real estate investor. Is that real estate investor really going to want to download My Ether wallet and get a ledger and hold their investment on that in a safe in their office? It's really unlikely, right? So until it can be as easy as buying a stock, it's going to be hard to find that buyer, so then there's really no liquidity. So that's why it's critical to have a T0 or a Templum or Open Finance Network up and running, having the proof of concept, and then getting people in that and making it very easy to use.
In many countries, like in US as well, in couple of months, probably the regulation is going to be settled, and security token is going to be probably the main one. But in Japan, our regulatory will be settled in a couple of months as well. So we're not sure our token is going to be security or utility. Probably our Japanese coin is going to be a utility basis. But and Korea also at the end of September or in October. So in many countries, regulation is going to be settled in a near future, and all the token economy and liquidity is going to be probably turn up a really good way, I believe. I should believe.
Well, is regulation something to look at, what they're doing, and if they're taking it into account?
Absolutely. Yeah. I mean, it's tricky also because it's kind of ever shifting. I mean, we talked earlier about kind of the stage of a token. I think it's now, the guidance of most law firms on these is that it's going to have to be the token has to be very developed, or the network has to be developed if you are going to try to pass it off as a utility token. Yep. So pretty much everything is being is a security in this SAF form, and then needs to be developed to a certain level before you actually even do a token distribution.
Yep. Yeah, I think especially if you're investing in an ICO before in the pre-sale stage, right? Before it's actually been delivered, and you're depending on it being a utility, you have to really believe that that network's going to get to full functionality and not have any additional mechanisms added in that are security-like mechanisms, right? So something like staking or any kind of interest-earning activity is likely to be looked at as a security in the long run. So understanding what the current regulatory frameworks look like and where the SEC is likely to come down on these things, as well as the risk tolerance of the team. And you want that team to have a relatively low risk tolerance when it comes to the regulatory side of things, to the degree to which you're putting your money behind them.
And that they have lawyers.
And that they've got good lawyers.
Definitely need lawyers.
And you're seeing it in how they're raising capital.
Just if they have a lawyer,
Yeah.
Some teams don't. Some teams will put out a white paper and say, oh, this is it. But it's also part of the risk of investing in this is that we have enough regulatory clarity that you can make some reasonable judgments about what's going on.
I'd say that's true.
But you just have to know there always is that risk that the regulations can change, or what you thought was a reasonable assumption really wasn't a reasonable assumption. Yep. And that is a risk to this investment. Now, you should be compensated on the return for taking that risk, which is why it's critical to get the right valuation as well.
Yep.
Just investing onto the crypto itself is, of course, it's kind of dangerous. We should always think about equity as well. So, we should always think about the risk. Yes.
Yep. And I agree that it's dangerous, and I agree that you should be careful in how much you allocate of your portfolio. But I also want to point out that it is much, much less dangerous now, in my opinion, than it was a year ago, right? Not only because of the way that the market has readjusted, but more importantly because of how much smarter we all are, and the rest of the crypto enthusiast community is about precisely these questions. Exactly the things that we're all saying on this panel are probably not big surprises to all of you, and they're probably the way that you're already approaching thinking about investing in ICOs. And this has just changed dramatically across the board. The standards have gotten so much higher. The gauntlet has gotten so much more intense for projects. Plus, you're seeing the attraction of higher quality teams. So, I mean, it's like, classic Warren Buffett, what time to invest. It's the time when capital is the scarcest, but I also believe that it is the lowest risk, including the regulatory clarity that we've been receiving increasingly.
Well, the threat of jail is higher too.
Yeah. And so there's probably a few questions you could ask a project on how they're raising capital that will help you, again, kind of weed out things that you should avoid. So if they're doing a public sale in the US, it's probably not the greatest idea. If they're selling only to accredited investors, well, then you realize that there's some risk factors that are mitigated. If they're only raising from non-US, non-China, then perhaps there's some other risk factors that are mitigated. So you can probably simplify the analysis some too and just ask a couple basic questions on how they're going about completing their ICO.
Yeah, and it's also important of those questions, what is the cap? What's the hard cap? Some people just say, oh, we're going to raise as much money as we can because we need all that money. I prefer to invest in projects that say, you know what, we're going to raise $20 million because that's going to give us 3 years runway, and we're good with that. Rather than we're going to raise $300 million, and that's going to be everything that we raise for the rest of our existence. So I always ask, what is your hard cap? What's that going to be?
And what they're going to do with the money too. Are you using 90% of it for marketing?
Right.
Yeah, when they're raising so much money too, that's usually a red flag to me. I'm like, why do you need to raise $1 billion?
And there's this notion right now as a justification for that I need a war chest to compete with EOS or other projects that are already out there. And again, I think that goes against a lot of what's worked historically. Like, you generally can't just buy people to develop onto your platform. Like, that's as a mechanism for what's a successful technology platform that generally hasn't worked. And so again, you start hearing the same rationales over and over again, and I think there's some natural red flags there.
Okay, thank you. Thanks, panelists. We're out of time.